Ever felt lost in a sea of crypto data, those intricate charts on Gemini leaving you more confused than informed? You're not alone. Understanding how to decipher and leverage Gemini's advanced charting tools can be a game changer, transforming you from a bewildered bystander into a confident crypto navigator. Think about it. The cryptocurrency market pulses with information. Every second, prices fluctuate, trading volumes surge and recede, and a myriad of indicators paint a complex picture. Gemini, like other leading exchanges, provides a powerful suite of charting tools designed to help you make sense of this dynamic landscape. But simply having access to these tools isn't enough. You need to know how to wield them effectively. This isn't just about looking at pretty lines on a graph. It's about understanding market sentiment, identifying potential trends, spotting crucial support and resistance levels, and ultimately, making more informed trading decisions. Whether you're a seasoned trader or just starting your crypto journey, mastering Gemini's advanced charting can provide a significant edge. So, where do we begin? Let's dive into the core components of Gemini's charting interface and unlock their potential. First things first, accessing the advanced charting features on Gemini is usually straightforward. Once you're logged into your account and viewing a specific trading pair, like BTC/USD or ETH/BTC, you'll typically find an option to switch from a basic view to a more advanced or professional charting interface. This might be a button labeled Advanced Charting, Trading View, or something similar. Clicking this will open up a more comprehensive set of tools and indicators. Once you're in the Advanced Charting view, you'll immediately notice a more detailed price chart. By default, this chart will likely display the price action over a specific time frame, such as the last day or week. However, one of the first things you'll want to customize is the time frame. Gemini usually offers a wide range of time frames, from 1-minute charts that show very short-term price fluctuations to daily, weekly, or even monthly charts that provide a broader, longer-term perspective. Understanding different time frames is crucial because they can reveal different trends. For example, a short-term downtrend on a 15-minute chart might be part of a larger uptrend on a daily chart. Experiment with different time frames to get a multifaceted view of the asset's price action. Next, let's talk about chart types. While the default is often a candlestick chart, Gemini usually offers other options like line charts, bar charts, and Heikin-Ashi charts. Candlestick charts are particularly popular among traders because they provide a wealth of information within each individual candle: the opening price, the closing price, the highest price reached during that period, and the lowest price. The body of the candle indicates the range between the open and close, while the wicks, or shadows, show the high and low. The color of the candle typically indicates whether the price closed higher, usually green or blue, or lower, usually red, than it opened. Understanding candlestick patterns can offer valuable insights into potential price movements. Now, let's move on to the exciting part: technical indicators. These are mathematical calculations based on an asset's price and/or volume that traders use to identify trends, momentum, volatility, and potential buy or sell signals. Gemini's advanced charting platform comes packed with a vast array of indicators. Here are a few of the most commonly used ones and how they can be applied. Moving averages, MAV, smooth out price data over a specified period, helping to identify the underlying trend. For example, a 50-day moving average shows the average price over the last 50 days. Traders often look for crossovers between different moving averages, e.g., a short-term MA crossing above a long-term MA, as potential buy signals, and vice versa for sell signals. Relative Strength Index, RSI. This momentum oscillator measures the speed and change of price movements. It ranges from 0 to 100, with readings above 70 often considered overbought, suggesting a potential price decrease, and readings below 30 often considered oversold, suggesting a potential price increase. Moving Average Convergence Divergence, MACD. This trend-following momentum indicator shows the relationship between two moving averages of a security's price. The MACD line, the signal line, and the histogram provide insights into trend direction, strength, and potential reversals. Crossovers of the MACD line above or below the signal line are often used as trading signals. Bollinger Bands. These consist of a middle moving average and two outer bands plotted at a standard deviation away from the moving average. They measure volatility. When the price touches or breaks above the upper band, it might suggest an overbought condition, while touching or breaking below the lower band might suggest an oversold condition. The widening and narrowing of the bands can also indicate changes in volatility. Volume. While not strictly an indicator, volume is crucial. It represents the number of shares or contracts traded during a specific period. High volume during a price move can add conviction to the move, while low volume might suggest a lack of strong interest. To add these indicators on Gemini, you will typically find an Indicators button or a similar option at the top of the charting interface. Clicking this will open a drop-down menu or a separate window where you can search for and select the indicators you want to overlay on your chart. You'll also usually have the ability to customize the settings of each indicator, such as the period for moving averages or the overbought/oversold levels for the RSI. Beyond indicators, Gemini's advanced charting often includes drawing tools. These allow you to manually annotate your charts to identify key levels and patterns. Some common drawing tools include trend lines. These lines are drawn connecting a series of higher lows, and an uptrend, or lower highs, and a downtrend, to help visualize the direction of the trend. Horizontal lines. These are used to mark significant price levels, such as previous highs, lows, or areas of potential support and resistance. Fibonacci retracement levels. Based on the Fibonacci sequence, these levels, e.g., 23.6%, 38.2%, 50%, 61.8%, are often used to identify potential areas of support or resistance after a significant price move. Pitchforks. These are more advanced tools used to identify potential trend channels and areas of support and resistance based on 3 pivot points. Learning how to effectively use these drawing tools can significantly enhance your ability to identify potential trading opportunities and manage risk. Now, let's talk about order types directly from the chart. Many advanced charting interfaces on Gemini allow you to place trades directly from the chart itself. This can be incredibly convenient and efficient. You might see buttons or a right-click menu that allows you to create buy or sell orders at specific price levels you've identified on the chart. This can be particularly useful for setting limit orders at potential support or resistance levels. With that said, thanks for watching, and until next time.